One of the world's biggest banks just made a statement that's shaking up everything we thought we knew about Bitcoin. Deutsche Bank, the $1.5 trillion German financial giant, declared that Bitcoin is entering a, quote, less volatile and more sustainable stage. When traditional banks start talking like this, you know something big is happening. Bitcoin just hit an all-time high of $123,077 yesterday. But here's what's really crazy. It did this while becoming less volatile than it's been in years. Think about that for a second. Bitcoin, the asset everyone said was too wild and unpredictable, is now calming down while still going up. That's not supposed to happen. Let me paint you a picture of what's actually going on here. Since November, Bitcoin's up 75%. At the same time, its volatility dropped to levels we haven't seen in almost 2 years. The old Bitcoin would spike up 20% in a day, then crash 30% the next week. This new Bitcoin? It's moving more like a traditional investment. Deutsche Bank's analyst Marion Labor says this is a fundamental shift in how Bitcoin behaves. So what changed? The answer is actually pretty simple. Big money finally showed up. Remember when Bitcoin ETFs got approved in January 2024? That opened the floodgates. We're talking $35 billion flowing into Bitcoin ETFs in 2024 alone. Another $50 billion came in just in the first half of 2025. BlackRock's Bitcoin ETF now holds $80 billion. They hit that number in just 18 months. For context, it took gold ETF 5 years to reach that level. Here's where it gets really interesting. Every single day, only about 450 new Bitcoin get mined. But on July 10th, ETFs bought 10,000 Bitcoin. That's 20 times more demand than supply. When you have that kind of imbalance, prices don't just go up, they stabilize. There's too much institutional money involved now for the wild swings we used to see. The numbers tell the whole story. Bitcoin's 30-day implied volatility dropped to 40%. I know that sounds technical, but compare it to where Bitcoin used to be, sometimes hitting 100% volatility. The daily volatility is now averaging 2.8%. 5 years ago, it was 4.1%. We're watching Bitcoin grow up right before our eyes. And it's not just the volatility numbers. Over 30% of all Bitcoin is now held by big institutions. Corporate treasuries own 31% of circulating Bitcoin. We're not talking about random people buying Bitcoin on their phones anymore. We're talking about Fortune 500 companies, sovereign wealth funds, even governments. Speaking of governments, the timing of Deutsche Bank's announcement is perfect. The U.S. House of Representatives just kicked off something called Crypto Week. They're voting on 3 major pieces of legislation that could change everything. The Clarity Act would create clear rules for digital assets. The Genius Act would regulate stablecoins at the federal level. And get this, they're even voting on something called the Anti-CBDC Surveillance State Act, which would stop the Federal Reserve from creating a digital dollar. This is massive. When Deutsche Bank says Bitcoin is becoming more sustainable, they're not just looking at price charts. They're seeing the whole picture, the regulations, the institutional adoption, the technological maturation. Everything is lining up. Here's what really caught my attention in their report. Deutsche Bank found that Bitcoin is breaking its traditional patterns. Usually, when Bitcoin's price goes up, volatility goes up too. Not anymore. Labor calls this a gradual decoupling between Bitcoin spot prices and volatility. In plain English, Bitcoin is learning to go up without going crazy. The implications are huge. Lower volatility means pension funds can finally buy Bitcoin. It means your retirement account might hold Bitcoin soon. It means sovereign wealth funds managing trillions of dollars are taking a serious look. We're not in the Wild West anymore. Bitcoin is becoming boring in the best possible way. Germany's entire banking sector is jumping in. Deutsche Bank itself is planning to offer Bitcoin custody services by 2026. When German banks, known for being conservative, start offering Bitcoin services, you know the game is changed. The U.S. government officially recognized Bitcoin as a sovereign-grade asset in March 2025. They're even building a strategic Bitcoin reserve. This isn't fringe anymore. This is mainstream. Now, Bitcoin did pull back to around $117,000 today after hitting that all-time high. Some people are calling this a crash. It's not. A 3% drop after a 75% rally, that's just normal profit-taking. The fact that it only dropped 3% actually proves Deutsche Bank's point. Old Bitcoin would have dropped 20%. 17% of American retail investors now own Bitcoin. Long-term holders are increasing. People aren't trading Bitcoin like a casino chip anymore. They're holding it like digital gold. Some are even generating yield through strategies like covered call writing. This is sophisticated stuff that only happens in mature markets. What does all this mean for you? If Deutsche Bank is right and Bitcoin really is entering a more stable phase, we're looking at a completely different future. Bitcoin at $120,000 might just be the beginning. When volatility drops and institutional money pours in, assets tend to find their true value. And nobody really knows what Bitcoin's true value is yet. The transformation is remarkable. Bitcoin went from internet money for tech nerds to an asset that trillion-dollar banks are analyzing and endorsing. It went from something your grandma warned you about to something her pension fund might own. This isn't just about price. It's about Bitcoin finally becoming what its supporters always said it could be, a legitimate part of the global financial system. Deutsche Bank, managing $1.5 trillion, doesn't make statements like this lightly. When they say Bitcoin is becoming less volatile and more sustainable, they're seeing something in the data that changes everything. The convergence of regulations, institutional adoption, and technological maturation is creating a perfect storm. We're witnessing history. Bitcoin is growing up, and the biggest banks in the world are taking notice. The question isn't whether Bitcoin belongs in the financial system anymore. The question is how big its role will be. What do you think? Is this the beginning of Bitcoin's next chapter? Like and subscribe if you enjoyed the video.